Hello and welcome to today's webinar on step-by-step guidance on the budgeting cycle. Before we start with today's webinar, I just wanted to know how many of you have worked on a budget before? So just type me in the chat box if you ever worked on a budget before. Okay, so we have only one or two responses. Okay, so a lot of people have worked on the budget before.
I
Okay,
think
so
about
for
8 to 10 responses.
yes, okay, so about 8 to 10 people have worked and others have not. So what we'll also want you to do is participate. Okay, when I'm asking questions in the chat box, especially for those who have done budgets in their organizations. Reason is because that you want to also learn about practices in different countries, right? So we have people here present from more than I don't know 15 countries, and it will be interesting to learn from experience from people from other parts of the world as well. With that, we get started, and what we'll do is I'll just quickly walk you through what we will be doing in today's session. So today we'll talk about the what. So what is budgeting? Why is it important? We'll start with that. Then we'll get into the budgeting cycle, which is the main topic for today's webinar, and we cover aspects like budget planning. So three phases of the budgeting cycle, right from the planning and preparing guidelines, calendars to executing the budget and then finally consolidating and reviewing everything and closing with the final meeting. So this is going to be today's roadmap. And before that, I think we should quickly introduce ourselves. I have with me my friend and partner, Dhaval Parvatikar, and I'll let him introduce himself and then we get started.
Hi, good evening, everyone. My name is Dhaval Parvatikar. I'm a qualified chartered accountant. I've also completed my 1 year executive management program from IIM Ahmedabad. Over the past 15 years, I've worked as CFO and a finance leader across diverse sectors in India and in the Middle East, sectors covering oil and gas, advertising and PR, shared services of a commodity trading company, software, and much more. I'm now the co-founder at FP&A Professionals Institute, which we started earlier this year along with my partner here, Asif. I've mentored more than thousands of chartered accountants and finance professionals through various initiatives. And over the past 5 years, I've been an active online instructor and I've trained more than 5,000 professionals on various topics like FP&A, finance leadership, data storytelling, and business partnering, and much more. So happy to partner with you, Asif.
Amazing. Thanks for joining and likewise happy to partner. And I'll quickly introduce myself as well. So I have been working in FP&A and finance for more than 10 years. Initially, I worked in audit for a few years and then moved into finance and FP&A. And overall, I have worked across three different industries in FP&A. And my most recent role, which was until November of last year, was leading the APAC and India FP&A function for Coursera. And after November 2023, we went into this full time. So we were doing this on the side on the weekends. This was called FP&A Professional, and it was a blog. And we were doing trainings on the side. But since November last year, we are into this full time. So almost a year, we are into this full time. Over the last 3 to 4 years, I've trained more than 3,000 students now across FPI and before that as well. And I've written two books on FP&A. One is the one about FP&A, which was back in 2022. And the most recent one is from Accounting to FP&A, which got published a few months back, in fact, in July, end of July. So with that, we'll also quickly talk about our journey at FP&A Professional Institute.
Yeah, Asif, there is a comment that your voice is low. Probably I
Okay.
can feel it a little bit as well.
Okay, is it better now? Can you hear me? Okay,
Yeah,
wonderful.
it's much better, much better. Cool. So where are we with FP&A Professionals Institute? 2018 is when I first published my course, FP&A Foundations, which is available on Udemy and on our portal. It covers all the basics of what FP&A is in terms of budgeting, forecasting, management reporting. 2022 is when Asif and I came together. That was when he had just published his best-selling book all about FP&A. and we came together to create a long form course, which was for 4 weeks plus. That's called FP&A Masterclass, which is our signature program. And happy to share that we have already completed 14 successful batches of the program. Moving to 2023, a lot of people came with the feedback saying that we need some self-paced courses. We won't be able to attend live programs. That's when we launched our 8 weeks FP&A Launchpad course, which also covers all the basics in terms of budgeting, forecasting, management reporting, data storytelling, business partnering, and all of that. As a feedback, a lot of students came back and told us that we now need a program in financial modeling. We now need a program in Power BI. That is when in 2023, Asif also launched his Master Financial Modeling for FP&A program, which is also completed 8 batches successfully. And 2023 has been an eventful year for us. And end of 2023 is when both of us decided to go into this full time. And here we are in 2024, almost completing a year, almost nearing our first anniversary for FPI. And we've launched many more courses. In the sense, we launched our Certified Global FP&A Professional, which is a 6-month comprehensive program, certificate program, which covers over 100 hours of content and advanced topics on FP&A. We launched a lot of challenges in terms of budgeting challenge, financial modeling challenge, accounting to FP&A challenges, along with a popular FP&A Ninja quiz as well, which runs every Thursday and has got some great reception. We also recently launched our AI for Finance and FP&A program, making sure that all our alumni are updated with the latest technologies. This program focuses on very specific use of AI for finance and FP&A. Asif also has written his second book, and that's also on the verge of becoming a bestseller, so to say. From Accounting to FP&A is the name of the book. If you still haven't got a copy, please go ahead and get that right away. It also has insights from over 20 finance leaders who have worked in FP&A, who were able to transition from an accounting role to an FP&A role. So that's what it has been. So 2024 has been a very busy year for FPI. And overall, we have trained more than 3,000 students across these various courses. And here we are with yet another webinar and a course for you. Asif, over to you.
Amazing. So, yeah, we have programs for all levels, beginner, intermediate, advanced, as we already talked about it. What we'll do is we'll quickly get into the budgeting cycle webinar or the budgeting cycle topic. But before that, it's important for us to just quickly understand a little bit about FP&A. So maybe we'll spend 5 minutes on what is FP&A, and then we'll get into the budget. So
yeah.
So if
you want to cover this?
Yeah, I'll cover this. So if I have to, and again, this is from my first book, which is From Accounting to FP&A. So if somebody asks me what is FP&A in one sentence, this would be my answer. Okay, so FP&A team acts as a bridge between the business teams and the senior management. And in the business teams, you work with different teams like sales team, marketing team, depending on the organization. It could be product team, engineering team, HR, operations, supply chain. So you work with different parts of the company or different departments in the company, collect a lot of data, provide them with a lot of information reports, and also work with the business teams to help the senior management understand what is the present situation of the organization, what was the last quarter's revenue, or what was the last month's revenue, what was the last week's revenue. And based on the reporting that happens with the help of business teams, the FP&A teams help the senior management make all the decisions that are important for running any organization. So that is a quick intro about what FP&A is. And Dhaval will talk more about what are the functions or key important things that people do in FP&A in the next slide.
Sure, thanks, Asif. So no matter what company you work for, right, small, medium, large, you will find some or the other variation of these 4 activities, right? Budgeting, forecasting, and under management reporting, you have 2 key activities, that is variance analysis and profitability analysis. While our focus on today's webinar is budgeting, let me just quickly touch upon all of these points, very quickly. Budgeting is where you are preparing a financial plan or an annual plan for the upcoming financial year for the company, right? And that is it just It is executed just before the start of the financial year, and the numbers are frozen. So usually the budget doesn't undergo a change once it is approved by board and uploaded in the system. Forecasting is all about tracking the ongoing performance of the business. Let's say I am now in the financial year and I've completed 3 months of actuals. So I have 3 months of actuals, and the balance 9 months of estimates is called as a forecast. We typically call it a Q1 forecast, right? So that's the difference between a budget and a forecast, where sorry, that's the difference between a budget and a forecast, where the budget number is prepared just before the start of the financial year, whereas forecasting is tracking ongoing performance of the business within the financial year. And under management commentaries, you do different kind of analysis, right? So one is variance analysis, where you're comparing actual versus budget, actual versus forecast, current month versus previous month, current quarter versus previous quarter, all these different kind of comparisons, and seeing where are you going off track and what is the reason for that variance, right? Whether it is higher or lower revenue, higher or lower expense, whatever the case might be. And then comes profitability analysis. Every company is structured in a different way, right? Some companies are structured business unit wise. Some companies are structured geographically, right? Or regional or branch wise, right? Depending on the structure. They have to do a lot of dissecting of the overall company profit and see which are those components which are profit making or adding to the profits, or which are those components which are loss making, right? For example, a company may have 50 branches. Maybe 4 of them are loss making, right? They will only come to know this once they prepare a branch wise profitability. So that's what profitability analysis is, and it is under the larger umbrella of management reporting. While these other activities are covered in our advanced programs as well, but today's focus is on the budgeting cycle, what happens in the budgeting cycle, and how the calendar is structured. That's our today's focus. Moving on to the next slide. Now, what is budgeting and why it is important? Now, think about a company, and the management of a company has a certain vision, right? Let's say if you're in 2024, the vision of the board might be that they want to double the turnover, or triple the profits, or enter 4 more geographies, or increase the headcount by 1,000 people, let's say by 2030, right? This vision remains just a wish if it is not translated into an annual action plan. That is where the annual business plan comes into play. That is where the budgeting exercise comes into play. What you're preparing is an annual estimate of what you want to achieve in the next financial year, where you have your estimated revenue, estimated costs, estimated operating profit for the upcoming financial year, right? Asif, if you can just click one more button. All these annual business plan, right, is also called by different names. Some companies use these terms interchangeably. They call it budget, right? Commitment, target, plan, right? So they would like to call this, what is the budgeted revenue, which means what was the revenue in the business plan? What is the committed revenue, right? What is the targeted revenue? What is the planned revenue? All of them are referring to just one number, that is the annual revenue that was prepared in the budgeting exercise that was carried out just before the start of the next financial year, right? So that is where the budgeting comes into play. Think about it this way, that all of us, could be working somewhere in some company, right? If we don't know what our estimated salary is for the next financial year, will we be able to plan buying a car? Will we be able to plan on upscaling ourselves? Will we be able to plan buying on a certain, mobile phone that you are planning for, right? So that's why we need to know our estimated income and our expenses to plan for a few things. The same exact thing is replicated in the corporate setup. That's where an annual business plan or a budgeting exercise comes into play, which is looking at the next financial year and preparing certain estimated revenue, costs, and profitability for the next financial year. Why budgeting is important? Now, there could be a number of reasons why budgeting is important, but I'll give you 4 strong reasons of why it is important. One is it provides certain direction and focus. We know what product to focus on. We know where the revenue is coming from. We know what are some of the products that we need to focus on, right? It gives you a focus area, a direction. Spending plan. Right? Let's say we plan to hire 50 more people in the next financial year. But when do we hire them? Do we hire them on 1st of January? Do we hire them on 31st of December? So the spending plan gives you a phasing of how these expenses need to be phased, right? That is the importance of a budget. Then comes holding management accountable. With every country finance team or every CEO, CFO, their targets or their incentives or variable pay is tied to the target, and this target flows out of the budget, right? As a CEO, as a CFO, as a management, they need to achieve that budgeted number or the target number for them to be eligible for those incentives. That in turn holds the management accountable for it. Then manage cash flows. Some of the businesses could be seasonal businesses. They generate some cash flows in the peak season, whereas they generate lower cash flows in the off season. So a better cash flow planning is possible only if you understand the right phasing of the budget, right? What is the cash flow that is generated in January or in the peak season or in the off season? That will help you plan your cash flows in a much better way. So these are some of the 4 strong reasons why an entire budgeting exercise is important. It will help you plan for the next financial year in a much better and a stronger way.
Okay, so before we get into the budgeting cycle, I just wanted to quickly check how many of you know about the difference between what is a budget and what is a annual operating plan. So if you can just type in the chat box, what do you think is a difference between the annual operating plan? Some people call it AOP and budget, which we are talking about right now. Okay, you can use simple language, whatever you feel is most relevant. Okay. Venkat is saying the methodology. AOP is Rajat is saying AOP is like a goal and budget is our goal. Okay, AOP is a vision. What else? Okay, so simple in simple language, not making it too complicated. Your AOP is much broader than the budget. So budget is one part of the annual operating plan. While you're preparing the annual operating plan, you are doing a lot many things apart from the budget. So budget is a key part of it or a key component of it. Yeah, somebody saying AOP is itinerary. So maybe they've read the post on LinkedIn. So yeah, AOP is like a detailed itinerary, as Manjeet mentioned. So it has a lot of other components, and budget is the financial component or the numbers part of the plan. Okay, so in the annual operating plan, you will have strategy, goals, you might have resource allocation, and a lot of other things that are required to implement the next year's plan and next year's strategy. Okay, so that is the annual operating plan, and budget is translating that annual operating plan or translating that vision into numbers. Okay, so if you're translating everything that you are going to do in the next year into next 12-month income statement or next 12-month P&L, then you call that as a next 12-month budget. The budget is more on the number side of the plan. However, plan is much more broader. Okay, so Jesse is saying budget is what we aim to achieve financially, and AOP is how we will be achieve those targets operationally. So yes, so budgeting is get translating it into more specific numbers, and AOP is a more broader part of the entire planning process. Okay, so hope that is now clear, because we'll refer to these terms in the budgeting process, which we'll cover in the next few minutes. Important to know the difference. So this is one, and the second one is what do you think is the difference between top-down and bottoms-up budgeting? You can just mention in the chat box. What do you think is the difference between top-down and bottoms-up budget? We will again use these terms a couple of times in the budgeting calendar. So I just want to make sure everybody is aware of these terms. So what do you think is a top-down budget? Okay, so Rajat is saying bottom up is from targeted profit. Venkat is saying top down is instruction from management. Akhilesh is saying top down is authoritative imposed from the top management. Top down is goals or direction set by top management. Okay, so I think most of you got this right. So top down budget is something that your senior management will tell you what they are expecting of the next financial year. Okay, so it is the direction or it is the guidance given by the senior management. Usually, when that guidance comes, they don't take any inputs from the middle management or the departments who are actually going to deliver that budget. Okay, so it's prepared or it is given by the senior management, although they understand everything and they know the business very well, but most cases the top down guidance does not include any input or any work from the departments. Okay. And bottom up, yeah. So Kshitij is saying bottom up is when the middle management makes the budget. So bottoms up is the opposite, where every department, every team in the company will prepare their own budget, submit it to the FP&A team. FP&A team will consolidate everything and then present it to the senior management. So that's the difference between top down and bottoms up. So Dinesh is saying yes, bottoms up is pretty granular. So it's way more detailed and way more exhaustive or comprehensive way of doing a budget. Okay, so now that we understand these two concepts, the first one was AOP, difference between annual operating plan and the budget, and difference between top down and bottoms up budget. We should be able to get into the budgeting cycle, which we are here for. Okay, so I'll just quickly introduce the budgeting cycle. So it's three phases. A lot of you must have seen this in the uh, in the in the poster that we shared for this webinar. So it's planning, execution, and consolidation and review. So we'll talk about each of these stages step by step in the next 1 hour or so. Okay. So let's talk about the planning stage first. Okay. So usually what happens during the planning stage, it consists of three different sub steps, or you can call it, I mean, two different sub steps under the planning. And the first step is development of budget guidelines. So even before you start thinking about preparing the budget, you are thinking about what are the guidelines that I need to issue to different people working on this year's budget, so that everything happens seamlessly. Everyone knows what is their role. Everyone knows what are the expectations from them, and everybody knows the timelines. So development of budget guidelines and the budget calendar, which we'll also talk about, is the most important part in the planning stage of the budget cycle. Okay. So we'll take some examples of budget guidelines. Again, these are not exhaustive list of guidelines. These are some examples that you can have it for your reference, and you can do it differently in your organization. These are some examples that just to give you an idea of what could some of the guidelines look like. Okay, so we'll talk about some of the examples of budget guidelines. Okay, one of the guideline could be that the budget should be submitted using the provided templates to maintain consistency. Okay, this could be one of the guidance you may want to keep it and share with the different people involved in preparing the budget, that they should be using the same or a standard template, and they should not be using any Excel file that they wish and submit the numbers in that. Okay, otherwise it will create a lot of confusion. It will create a lot of inconvenience while you are consolidating the budget. Okay, another guideline could be that you should provide detailed justification or reasoning for any significant variance from the previous year numbers. Okay, so this could be one of the other guidelines. Again, we are just talking about examples. Another guideline could be any adjustments to the budget after submission must be approved by somebody senior. Okay, so otherwise what will happen is they will submit you the template and then keep changing the numbers after few days, and they will tell you, okay, we submitted this last week, but the numbers have changed now. You consider the revised Excel file. Okay, so any adjustments if you want to make after you have submitted has to be approved by somebody senior, and reasoning has to be given why the change happened and what the change is. Okay, again, these are examples. Departments must submit a formal budget request for any adjustments. Okay, so if they want to make any adjustments, they must submit a formal request. Or if they want to make any bigger changes to the budget, they may want to you may want to have a detailed justification of why that is required. Again, this is one of the example guideline. Okay, ensure right phasing of expenses. What happens a lot of time is that people will submit, or the teams will submit the right annual number, but they will not break it down into months and quarters, so that when you receive the numbers, they will be all in the full year column, and they will not do the proper phasing or proper breakup of the monthly amounts. And alternatively, what they may do is just divide it by 12, which may not be the actual case. You may have some in some months you might have some more revenues and expenses, and in other months you might have less. So ensuring right phasing of expenses and revenues and seasonality of revenues is could be one of the guidelines. Okay. Another guideline example could be once the quarter is over, or it could be once a month is over, any unused budget will be sent back to corporate. Okay. So if they don't use the budget and the quarter is over, in this case, the budget will be sent back. They cannot carry forward that money in the next quarter, is one of the guidelines. It could be different for your organization. You could allow that. Okay. If you want to allow the roll forward of budget to the next quarter, you could do that. But these are some of the sample guidelines that I have seen in most cases or very commonly across while you are preparing the budget guidelines for the planning stage of the budgeting cycle. Okay, so we talked about the budget guidelines. Next is the budget calendar and preparing of the budget templates. So these two are the important steps in the planning stage. We talked about the budget guidelines. Now we'll talk about the budget calendar. Okay. So what usually people do while creating the budget calendar is they think about it as a very important event. So this budget meeting or the board meeting is considered to be a very important event in the corporate calendar or in the full year. And the preparations start months in advance. Okay, so not days, not weeks, but months in advance. And typically, what you can think of is you can think about any exam that you had given, which was a very important exam. In India, it's a board exam or board exam for the 10th or 12th, or maybe your graduation. So think about any exam that is an important exam. Usually, you would not, in most cases, you would not just start preparing for it few days ahead, right? You would make sure that you start preparing for it 6 months ahead of time and give it a lot of preparation, give it a lot of thought. Maybe keep time for some buffer if you have some uh, family events that you need to take care of. If you know that you won't be available for 2 months in between the next 4 months, you may want to pre-plan a lot of things. So very similarly, think about it as an important exam or an event, and planning starts a lot or months ahead of the exam date. Year in this case, it's a date when the budget is going in the meeting, board meeting for approval or review. Okay, so the year the exam is the budget review or the board approval meeting that happens at the end of the year. So this is how you can you would see it in most companies where December is the year end. Okay, so say for example, the 15th of December is your board review or your date when the budget needs to get reviewed and approved by the board of directors. Then you would pick up this date. Okay, and you would know this date based on previous year's experience. Okay, last year it happened on 15th of December. So this year, most likely it will happen between the 10th or the 20th. Usually it will happen around the same time. Okay, so say for example, it is happening on the 15th of December, and with that, you will work backwards and say that if the December board meeting is happening on the 15th, we at least need 1 month of time between the CFO and the CEO review and the board review. Okay, because CFO, CEO will review it and they may want to make some changes. They may request you certain additional things that you may want to include in the budget before the board review. So you might want to keep some buffer between the CFO review and the CEO review and the board approval. Now, for the CFO and the CEO review, again, you need to make sure that at least 2 weeks before that, again, this is an example. In this case, we are making sure that at least 2 weeks before the CFO and the CEO review, I am making sure that I have the entire consolidated version of the budgets, which which the finance and the FP&A team can review, and they want to keep at least 2 weeks of time between the time the consolidated budget is reviewed by the FP&A team and before the CFO gets a chance to review it. Okay, so during this time, a lot of things will happen. Individual department reviews will happen. So before submitting it to the corporate FP&A team, the individual departments will themselves review the budget. Once they review the budget, then they will submit it to the FP&A corporate FP&A team. Then the corporate FP&A team will do the consolidation. After the consolidation, the corporate FP&A team will do a draft review of the consolidated budget. And usually, when these reviews happen, there are some adjustments that are proposed by people who are reviewing it, which is usually senior management. And you may want to make sure that you have enough time or enough buffer to make all of those changes and all of those adjustments. And also, while you're doing this, also there will be month end in this, in between, quarter end in between. Say, for example, if you even go back 1 month, at the end of September, which is where we are right now, beginning of October, you may also have a quarter end. In listed companies, a lot of companies who are listed, they also need to work on the investor presentations and the analyst calls. So maybe 2 weeks you cannot work on the budget at all during that time. So you may want to prepare for it in advance and keep that as a buffer. Again, in this example, 30th October consolidation reviews are required. So preparation, template sharing, meetings, internal discussions, uh, department will start filling up those templates, and then they will review and then submit the template. All of these things will happen in 1 month before the consolidation and reviews. And to be able to do all of this in September, you may want to do the planning stage, which we are talking about right now, which is preparing the budget guidelines. We already saw a few guidelines examples, and preparing the budget calendar. So this is the budget calendar. So we may want to start all of this maybe in mid of August or early August, so that everything happens as per schedule. And usually it takes about 2.5 to 3 months. Here it is, I think August, September, October, November, December. It's more than 3 months because a lot of other events will happen in between. Here there will be a quarter end, here there will be a month end. So whenever there's quarter end, month end, you will maybe put the budget aside for 1 week or 10 days, focus on the month end, focus on the quarter end. There might be some other events. Usually there are offsites, anniversaries. I mean, a lot of companies have events in between. So you need to plan for all of those events specific to your organization and make sure that you plan for it ahead of time. Okay, so this is how the budget plan or the calendar looks like. Another way to put it is you can do it by weeks. You can do it by weeks, and say August, you divide it into 4 weeks and you place all of those bullet points that we saw in the previous slide week by week. Okay, so you can divide the calendar by 4 weeks, and you can say, in this week we'll do this, in this week we'll do this, and the board review needs to happen last week of November. So working backwards, I need to plan my all the activities that need to happen based on that. Also, a lot of your prior year experience will come your handy, right? Well, from the last year's experience, you will know that okay, last time in October this thing happened, so this time I should plan for it ahead of time. Last time in September, there was a labor strike. Okay, so the entire organization or the factories or everything was closed for 2 weeks. You may want to plan for that if that is going to occur again. Okay, so based on your previous year's experience, you will have a lot of insights on how to structure this calendar specifically for your organization. Okay, so the question in the chat box, I can see, what about if the prices and hard currencies have been changed during the budget cycle? So that's a great question. So usually what will happen is, while the budget guidelines are given to you, there might be some guidelines on the foreign currency rate, right? On the on the pricing or on the discount or on the currency. So they will give you some guidance here, but this guidance may not be the final guidance. They can change that during the budgeting cycle. So what they will tell you in the guidelines is, okay, here is the preliminary exchange rate or preliminary pricing, whatever the case is, and we will send you the corporate FP&A team or the person who is managing the entire budget will tell you, okay, we are giving you the preliminary rates right now, but we will send you the final rates in November. So you make sure that your templates are structured in such a way that when we give you the final rates, you should be able to just change the rates, and everything in the budget should get automatically updated. So you may want to plan for that as well. That could be a part, maybe that would be a part of the guideline, that okay, these are preliminary rates and you will get the final rates in November or December, whether it be for exchange rate or for any other. Okay, so hope that helps. So what I'll do is I'll take a pause here, see if there are any more questions on the planning stage. If not, we can go to the next one, which is execution. Okay, we'll give it maybe 5 seconds, and if there are no questions, we'll go to the next part. All
Okay,
right.
let's
So
move forward.
yeah, let's go to the execution part. So we talked about the planning, which is developing guidelines and preparing the budget calendar. So I'll take questions again at the end of the execution stage. So if you have any questions in mind, do put it in the chat box. But let me cover the execution stage, and then I'll take all the questions together. Okay. So once you do the guidelines and once you do the calendar, then we talked about all of this, right? So when you come to the execution stage, you start preparing the templates. Okay. You start thinking about what details or what inputs you need from the different business teams for you to be able to, as an FP&A manager, to be able to compile and consolidate the entire company budget. So you have to start thinking about what all data you need from the different sales teams, marketing teams, different teams you have in the company, so that you are in a position to be able to compile the entire budget and present it to the senior management. So preparing of budget templates is one of the most important activity that happens at the end of the planning, or I have placed it in between the planning and execution, but because it's partly planning and partly execution. So you start planning about the templates, what you need to share, and also you execute in terms of preparing those templates in a way that it is most efficient for you to collect the data, and later on also you may want to make it in a way that it's very easy for you to consolidate. Okay, so preparing and sharing templates is an important part or the first step in the budget execution. Okay, now what I'll do is I'll just quickly share one of the examples of a template so that it will give you some idea of how a template could look like. Let me just Okay, so this is one of these examples of a sample template. So typically what you may want to do is you may want to give the business teams as much detail as possible, okay, for them to be able to fill up the 2024. In this case, I'm just assuming that the budget year is 2024 and you're giving them the 2023 data. So I'm giving them all the details I have for 2023. So how this is structured is I have kept some empty spaces for 2024, which they have to fill up, but I'm giving them all the details I have for 2023 by product, by, in this case, it's a product-based company. So I'm giving all the details by channel, by product, by flavor, by customer for 2023 that you have. And with that detail, so this is the volume details or details of the number of products or number of uh, items that need to be sold or that are sold. So this is the volume details. And based on the volume and the pricing, you can populate the gross sales and the net sales. You're giving them whatever details you have for 2023 and asking them to populate it for 2024. Okay. Now, what typically would happen is if there are some people new in the business team, say, for example, in this case, this is a sales template. Okay. So, for example, if this person is new, okay, and you may not be sending this one template, right? You may have to send a different template to, if there are 7 people in the sales team, 7 sales managers, you may have to uh, send, say, for example, Ajay is one of the sales manager. You have to send Ajay specific information to Ajay, uh, Mahesh specific information to Mahesh. And so you may just take one example. Okay. So say, for example, in this case, Ajay is one of your business partner and as a sales manager. Okay. So you will send Ajay all of the sales that he had done in 2023, all of the volumes and all of the gross sales, net sales, discount, everything, in putting it into a template. And you will get on a call with Ajay and tell him, okay, this is your 2023 data. Could you help me with product wise, customer wise, and whatever details you need here, it is channel wise, flavor wise. Could you give me all the details for 2024? And it may not be possible for Ajay to give you everything. He may have to go back to his team. He may even have to go back to all of these customers and figure out, okay, what will be the orders that they can expect from the next year or for the next few quarters. And then he'll go back to the customers and his team and then collect all this information for 2024 and then give you back the information. And based on that data, you can populate the sales number in this case for the budgeted year. Okay, and you'll have to do this for each of the managers. There might be some people who might be already been in the system for maybe a few years, so you may not have to explain. Say, for example, Ramesh and Vijay have been working for this company for last 5 years. You may not even have to do anything. You may just have to send the template and they will give you all the data in a very good and a set format. But say, for example, Jay is new to the company, you may have to sit down with him, meet him on a Zoom call or in a conference room and explain him what exactly needs to be done. And you might need more time with somebody who's new in the organization. Okay, so this is how a sample template looks like. Again, I'm not going to into too much detail, but I just wanted to show you example of a sample template. Okay, so this is the third step in the budgeting process or the budgeting cycle. And the next is once you send out the template, as I mentioned, you cannot just hope that people will, you cannot just send an email, okay, this template is required to be filled up and you have to send it by end of 2 weeks. Most people may not respond to that. You may have to meet them. You may have to conduct meetings, communicate what is expected, communicate some best guidelines or budget guidelines that you had said. You may have to talk about these guidelines in these meetings. Okay, so you may have to meet them a couple of times in between, help them understand why it is important, and they may have a lot of questions, so you may be able to answer all of these questions during these meetings. Okay, once all the meetings are done and once they are okay and they are ready with their draft templates, they will send you back those draft templates, and each of the departments will send you their templates, and that's when the execution stage gets over. Now at this stage, the FP&A team has collected all the templates from different departments, from sales department, from production department, from marketing department, and they have all the information they need for preparing the overall consolidated budget. Okay, so this is where the execution stage in a way ends, and then consolidation and review will start. Okay, so let me take a pause here and see if there are any questions on the execution stage. So execution stage, we talked about preparing templates, sharing templates. We saw an example of an Excel template. We talked about it's not just sending out email templates, but also you need to meet them, make them understand what needs to be filled up, what are the guidelines. They will submit you the templates, and once you get the submissions from all the departments, then you can think about consolidation and reviews. Okay, so let me take a look at the chat box. How many months of actuals and forecasts is better for budget planning? How many months of actuals or forecast? So as somebody has already answered, 9-month YTD and interpolate. So depends on which month are you doing this. So if you're doing this at say end of September, so you can give the 9 months of actuals if you have the 9 months of actuals, and then 3 months could be the last updated forecast or the last updated estimate that you have. Okay, so that could be the best way. And again, when you do this in December, you need to update the October and November actuals for the 2023 when you update the budget, and maybe that might impact the numbers for the next year. Please, can you share this template? So this template is having a lot of data that I may not want to share it. I mean, right away. So what I'll do is I'll create a version of the masked version of the template, and then I'll share it along with the YouTube video. So whenever the YouTube video goes out, you can just download the blank template from the uh, description in the YouTube video. Okay, so we'll share this template as a part of the YouTube video description link. Okay, can we have the slide? Okay, so we'll also make sure that you get the slides as the, but you don't need the slide, right? You will have the access to the recording, so you can watch the recording. So we'll give you the recordings and the uh, blank template that we shared. Okay, with that, let me go to the next part, which
So
is
there was one more question on the budget transfer, right? From one cost center to the other.
okay.
Should we
Let
take
me
that?
just go up. Yeah.
I can read
Yeah.
it. Fine.
Okay.
Can you please discuss on the budget transfer from one cost center to the other cost center? That was the question.
Okay. If you want to take it right now, we can take
Yeah.
it.
I'll just quickly touch upon it. So basically what happens is that, some of the common costs, right, they get accumulated in a cost center. Let's say, for example, group medical insurance, right? So that could get accumulated in the headquarter cost center, right, which needs to be allocated to different departments as part of the budgeting exercise as well. So that is how it is done. So it is usually done as an allocation. You know what costs need to be allocated to the respective business units or respective subcomponents in the business basis a certain metric. Now that metric could be headcount, it could be area, it could be revenue, whatever the case might be. Right. So basis that you will need to factor in that budget transfer as well.
Okay, so what we'll do is with that, we'll go to the last part of the webinar, which is the consolidation and reviews. Let me go into the consolidation and reviews. So what will happen as we looked at the previous phase, which was execution, where we had received all the templates from different teams, right? So consolidation will be very simple exercise. It will be just adding up all the departments, or in case of different teams information, and putting it together. So for example, there are two departments. You will make sure that you add up both the departments to get to a consolidated company level budget. And once you have the consolidated version, you can start reviewing the budget for different analysis that you can do. Okay, so some of the common analysis that you can do is you can look at what is the changes from last year or year over year. Okay, what is the reason for variance? Okay, uh, you could probably give some proactive guidance based on the initial data that you see. If you see, okay, something is missed, okay, one of the department has missed one of the key cost items, and you can just ask them, okay, this cost item was there last year, but you're not budgeted for it for this year. So do you want to have this in this year's budget? Okay, and they most likely they will say, okay, yes, I probably missed adding it to the template, but this expense is going to be there this year. So you may want to just review it line by line and make sure that you have the reason for each and every line item that has been submitted. Okay, so let me see if there is an example. Let me just, so the same template, let's say, for example, we got that template back after the people had filled. Okay, so we received now this bank template I just shown you. We received the final template, and we got the data in the required format we wanted. So what we can do is we can then do some analysis on that template. We could maybe just summarize all the data we got, and we could do some horizontal analysis. Okay, what was the percentage of each of the products last year, which is 2023, and how does it look like in the budgeted data? Okay, so you can do some analysis in terms of the sense check of the data, in terms of the percentage mix, product wise, channel wise. You can do all of those analysis. Along with that, what you can also do is you can do year over year comparison or month over month comparison versus the previous year, and see if there are any major variances. And then based on that, you can reach out and ask more questions, or maybe you may find some errors which you may want to fix it. Okay. So some of the things that you do is you do a sanity check, you can do horizontal vertical analysis, you can do a trend analysis, you can do a check for seasonality. If it's a seasonal business, you may want to make sure that they have factored in the seasonality and the festivals. You may want to do a review by top customers. You may want to do a review by products. You may want to just analyze it by channel. You may want to analyze, in this case, by impact or discount. You may want to analyze it by how much business is under contract and how much business is new, or how much business is unidentified. So these are different ways you can analyze sales information or sales data. But depending on what budget you are going to review, you will most likely be doing some of these, and maybe some very specific to that particular area. Okay. But hopefully that this gives you an idea of what happens when you receive back the data and you consolidated it, and you need to make sure that the data is is good quality, in terms of you've done all the sense checks and you are happy and you are comfortable with the data that you are going to present it to the senior management. Okay, so this is what we are talking about in terms of the reviews, which is month movements over last year. Make sure you know what are the reasons for the differences, or if you want to make any adjustments, you make sure that you pass on that information so that the team makes that adjustment and sends you back the revised version of the template. Okay, so I'll take questions. So I see some questions coming up. So I'll complete the final part and then we'll go and get into the questions. Okay, once the budget once the consolidated budget is reviewed and you're happy with it, most likely what you will do is, if it is in Excel and if you are also using a budgeting tool or a consolidation tool, then you will upload that budget in the in the tool. And it will not be just now, maybe you may want to be doing this at every stage. Okay, so in July you received some budget templates and then you updated it in the budget tool, and then in August you may wanted, you had a review, first level of review, and then there were some changes also. July actual numbers or the August actual numbers were at that time forecast. But in this version, you may actualize July to August and make some adjustments that were proposed in the review. Again, maybe the CEO4 review happens in October or the CEO review happens in October. Here again, you may want to actualize September, August, which was forecast in the previous version, and then make all the changes that were proposed by the reviewers or people who are reviewing the budget. And that way there will be like multiple versions of this budget. If you're not using a tool, you will do all of this in Excel. If you're using a tool, you may do this in Excel while collecting the data, but you may want to upload it into a tool so that there is version control and people know what version everybody is looking at. Otherwise it can get very confusing. If you are looking at version 5 and your boss is looking at version 6, you may not be looking at the same numbers. Okay, so locking the budget at different stages or different points and uploading it in the tool is one of the things that people usually do if they are not using just Excel, if they are also using. But if you're just using Excel, you may not have, or you may not be doing this. You may just have everything in Excel and you may just name the Excel file as version 1, version 2, version 3. Okay, so I think that brings us to the end of the budgeting cycle. So we talked about consolidation, we talked about FP&A teams reviewing it, we talked about then the business teams will also review it with the FP&A lead or the CFO. Then there will be a CEO, CFO review, and then finally the board meeting that we talked about while we were preparing the calendar. Okay, so this is how the entire budget cycle looks like, right from the start, where you are preparing guidelines and calendar, and then to the end where you have the final approval from the board. So entire process takes most likely 2 to 3 months, in some cases even more in most big organizations. So if you're working for a startup or a small company, then you might be able to do all of this in maybe 1 or 2 weeks. However, in most bigger companies, this usually takes 2 to 3 months of the entire process. Okay, so that brings me to the end of the planned webinar. What I will do is I'll just quickly cover about some of the more important elements or more another important elements of the budget, and then we will take questions in the chat box. Okay, so we looked at the budgeting cycle. However, budgeting cycle was one part of it, and actually preparing the different parts of the budget, right? Different components of a budget is what happens during the execution stage in detail. Okay, so usually it starts with the revenue budget, and then in a product based company it could be a cost of production budget or a cost of goods sold budget, which would include your production, inventory, direct materials, direct labors, manufacturing overheads, uh, selling and general administrative budget, R&D budget. Some people talked about capex budget in the chat box. So all of those will need to be prepared simultaneously during that period, while you had as you had mentioned in the calendar. And what we are doing is we are doing a 3-day budgeting forecasting bootcamp, which is next week. Okay, so it's a 3-day, 2 hour per day. So overall 6 hours of live budgeting and forecasting bootcamp, where we will go into each of these examples in detail. And just like the Excel I've just shown to you, we'll go into the Excel files, examples or case studies of each of these parts of the budget in detail. And what it will cover is it will cover steps in budgeting, which we already talked about. It will be covering more in details of different budgeting methods. So today we talked about only the top down and the bottoms up. There are more budgeting methods. So we'll talk about more budgeting methods in detail. Budgeting cycle, budgeting calendar, we looked at a high level or an overview, but we'll take more, we'll take a look at more examples on this, how it looks like in detail, along with examples for revenue, cost of goods sold budget, marketing budget, headcount budget. So different types of budget we'll do, make you prepare in Excel, along with not just budgeting, but also forecasting, as we had seen in the beginning. Forecasting is another important element of budget. So what is forecast? How is forecast different from the budget? What is forecast? What is rolling forecast? What is forecast versus rolling forecast? Uh, what are some of the commonly used forecasting methods? What are some of the important things that you should keep in mind while you are doing the forecast? So all of this will be covered in that 3-day budgeting and forecasting bootcamp. Now, usually when we do such events, which is 6 hours of live training and along with certification and along with a lot of reference material, we usually price it at 197 US dollars. However, because this is the actually the first time we are doing only the budgeting and forecasting bootcamp. Usually we do entire 4 modules. So this is one of those 4 modules, which is a part of our FP&A masterclass. Okay. So because this is the first time we are doing it, we are maybe this might maybe the only time you might see this at $59, and you may again never see this price again when we do this next time or next quarter. So if you're interested in learning about budgets in detail, I think this 6 hours will be the best investment of your time and the $59. And in fact, what we had decided is we will even give more discount for people who take action immediately. So for the first participants, they can use this discount code and they can get another 10% discount on this $59. But this will be only for the first 5 participants who are present here today in the webinar. Okay, so I think with that, Dhawal, do you just want to quickly talk about the other events that we are having this month, and then we can take questions?
Sure. In the meantime, you can go ahead and share the link in the chat box
Yeah,
for the
actually,
budgeting and forecasting bootcamp.
I'll have to stop sharing screen for that. So I'll share the link, or maybe you can share the link, and then we can talk about the events. So do you have the link with you?
I'll just have to get it once again.
So it
I
should
can
be
share the screen as if I can share the screen.
okay. So you share the screen, and then I'll share the link.
Yeah, just wanted to quickly update you guys on our upcoming programs in October. So Asif already spoke about the 3-day budgeting and forecasting boot camp, which is from 8th to 10th of October, 8 p.m. to 10 p.m. IST. Asif is just sharing that link in the chat box for all of you to.
Okay, I shared the wrong link. I shared the webinar link. Let me share the bootcamp link.
Sure, no worries, no worries. Apart from that, what we are also doing is this time we are coming up with a full day in-person financial leadership masterclass, which is an in-person workshop in Dubai. That's happening on 19th of October, Saturday, full day, where we'll be deep diving into strategies of how do you move from an individual contributor role to a leadership role, right? So you don't need more finance and accounting to become a finance leader. So what we'll be looking at here is practical tips and strategies to help you transition from those individual roles to a team leader and a leadership role as well. So these are some of the two programs that we are doing in October. So budgeting and forecasting bootcamp is the next immediate one that is happening on 8th to 10th of October. If you like what we shared today, then that is a place to be, where we'll be covering a lot of examples on various budgeting and forecasting examples. We also just are on the verge of finalizing our final round of applications for our 6-month exhaustive certification program called Certified Global FP&A Professional Program. The next cohort for that is starting on 5th of October. If you're on our mailing list, then you may have received some details about the CGFPA program as well. So make sure if you have any doubts on that, you reach out to us. Apart from that, you can also check out our FP&A Launchpad bundle, which is our self-paced program, which not only has concepts on FP&A, but also has preparation stuff like interview, resume preparation, certain external expert sessions that we had conducted, a lot of cheat sheets, and also Asif's popular book as well, all about FP&A. So all of that comes as part of the Launchpad bundle. You can check out that on our website as well. So you want to cover this quickly?
Yeah, we
You
don't
can
have to
skip
get
this one.
into that. We can skip this. So what we'll do is we'll take the questions. You can stop
Yeah.
sharing this screen. We can take the few question and answers.
So there are some questions in the chat box, Asif. Let me just quickly bring them up one by one. Maybe you can answer them.
Yeah.
Is the budget cycle for both OPEX and CAPEX?
Yes, so this what we discussed, all the elements on the slide, right? Revenue, uh, this cost of goods sold, production, all those are operating. But there is also a capital budget or a capex budget that happens. where you plan for what new purchases you want to do next year, what will be the depreciation, all of that. So the the cycle is for the entire budget cycle that we discuss is for operating budget. The capital budget is usually done by the finance team independently. They may not need a lot of help from a lot of people, maybe except for the procurement team. So they might just work with the procurement team and then do the capital or the capex budget with them.
Yeah,
Hope that
I'll just
answers
add
your
one point to
question.
that. Capex is usually part of the budgeting cycle as well. If you want those, if you want the respective depreciation or any other
Yeah.
recurring expenses on that Capex to be reflected in the OPEX budget, then you will have to
Yes.
do it, along with your regular budgeting
Yes.
cycle as well.
Yes. And a lot of companies also give some growth targets. So for those growth targets or for new some getting some new businesses or new products, you may require those cap. So usually when you send the template you can make sure that you have a tab for capital expenditures as well. Where if they need anything on the capital expenditure side, they can send it to you in the same template, and then you can use that while you are doing the capex budget. Okay, the
Okay,
next
so next
question.
question
Yeah.
is, let me read that out for you, Asif. You can answer that. Will this budget approach differ if it is a top-down approach, or does this apply to both types of budget? I think the question is around the budgeting cycle. Will the cycle and the steps vary if it is
Yeah.
a top-down approach versus a bottom-up approach?
No, so this cycle is for the bottoms up budget. A top down budget is very simple. The senior management will just spend maybe a couple of hours or maybe a day or two, and then based on their intuitiveness, their understanding of the business, their uh, their business acumen, they will create a very top level budget. So this is only for the bottoms up budget. All this will only happen during the bottoms up budget. Top down budget will happen parallelly, but that might be just happening very quickly in maybe 1 or 2 days or maybe a week or two.
Yeah, one point that I would like to highlight is that all these budgeting approaches are not mutually exclusive, right? All of them can
Yeah.
run simultaneously. We can use multiple things. For example, certain line items in the P&L, we can use zero-based budgeting, right? For some line items in the P&L, we can use incremental budgeting basis what has happened in the last year. So all these budgeting methods are not mutually exclusive. It doesn't mean that if we are using top-down, then we cannot use bottom-up. It's a combination. End outcome is that you are coming up with your estimated numbers for the next financial year.
Absolutely.
Yeah, the next question is, when do we prepare variance report? Is it budget approved versus budget utilized, or is it actual figures in the book versus the budget?
Yeah. So variance report you can do while you are doing the budget presentation as well. So you can compare the budget versus the previous year. So that is also an example of a variance analysis. So you can do variance analysis in the budget presentation as well. And you can do it while you're doing the monthly management reporting or the quarterly management reporting as well, while you're presenting the actual versus the budget for the particular period.
Cool. So next question
How?
is, Asif, how will a budget of a real estate company look like? Maybe I can start and you can
Yeah.
add on to that. See, what we would recommend is that you don't tie yourself to up to one industry. Every company has certain fundamentals, right? So there is estimated revenue, there is estimated costs, there is estimated margins that you will have to predict, right? It happens across industries, and a real estate company is no different. You will have to probably look at what is the status of the project, what is the project completion percentage. Will you be able to sell those units? Will you be able to sell those sell the space, right? And accordingly plan your costs as well. So if you feel that only 90% of the project, or let's say phase one of the project is going to get completed in the next financial year, then you will only be budgeting for phase one revenue and phase one costs, right? So while a real estate project may extend over multiple financial years, we'll have to predict what is the income and expenditure for the next financial year, and then prepare that or incorporate that in your budget accordingly.
Yeah. Actually, a it's it's going to be a vast training itself. Maybe 4 or 5 hours of training itself. Maybe we can plan a webinar around it someday. In the next few months. Training or on how to do a budget for a real estate. So we'll take that as a feedback, but may not be possible to show it very quickly. But we'll definitely have this as a feedback that people are interested in learning real estate budgeting. So we'll maybe come up with a webinar or a training on that. Uh, Apologies, I need to drop off. So the recording will be available in the next 3 days. I think usually it takes a day for the editor to work on it and then publish it on the YouTube channel. So, I mean, keeping a buffer of a day or two, maybe it will be there in the next 2 to 3 days. And you will get the notification on the email as well as the WhatsApp group when the webinar or the recording is published. Okay, I think
Yeah,
we've covered all the questions from the
no,
top.
there are a couple of questions, Asif.
Okay.
Maybe I can take them quickly. So, how will the budget of a law firm look like? See, any service company, the methodology will remain the same. So, you will have to look at your clients. What are the existing client contracts? What are your new business contracts? Right, and we cover some of these examples in the budgeting and forecasting bootcamp as well, where we are looking at a service company, we're looking at an edtech company, where we're looking at a manufacturing company. All of those examples will be covered. But it will be no different from any service company that you can imagine. What about forecasted cash flow and balance sheet?
Yeah, so I can answer that. So usually what you do in while you're doing the budgeting is you're focused more on the P&L. However, you can prepare the balance sheet and cash flow statement for the budgeted year. You can do that, and that should be you should be able to do that basis your present year financial information, the present year balance sheet, and the budgeted P&L. Based on that, you should be able to do a quick update on the balance sheet and cash flow statement if the need be. Okay, again, we cover that in detail in the financial modeling program where we do the three statement financial model from P&L to balance sheet to cash flow. And usually in FP&A, we do a 13-week cash flow forecast where we do a weekly cash flow forecast. So that is something that also we cover it in the in that is also what we cover it in the we are going to cover that cash flow forecast in the budgeting and forecasting bootcamp. What happens if the numbers totally change when we actualize on September figures while budget was built on July figures? So that is a very common situation, right? So things usually change in many, especially companies which are in a very dynamic environment or a fast changing environment. So it could happen that you had assumed something for September, but when the actual numbers for September came, it was maybe 20% less or 30% more. It could be that case. In that case, you need to revise your September to actuals and your remaining October, November, December, and the budgeted year will need to be updated based on if that September is going to have any impact on the future. If yes, then you'll have to change all the numbers for the future months as well.
I'll just add one point to that. So, see, the overall
Mhm.
objective of the budget is not about accuracy. It's about directional, directional estimate, right? That you want. You want what would be your rough number for the next financial year. What are you going to achieve for the next financial year? So, accuracy is not expected the last dollar, right? So, while you can predict future to some extent, you cannot completely predict it. That's where the budgeting exercise comes into play. What you want to achieve is directional. In its budgeting is very directional in nature. What you want to do is just give them a goalpost saying that, okay, this is where we are heading and this is what we want to achieve for the next financial year.
Absolutely. So there's one more question. So there is, I'm getting an error while making the payment. So yeah, usually the LMS accepts cards which has international payments enabled. So if you don't have the international payments enabled, you'll have to do that and then make the payment. But Sampada, what we'll do is we'll ask somebody from our team to reach out to you and uh, give you some alternate payment options as well if you wish to join program. Okay, so anybody facing any payment related issues, you can just drop a note at, I'm just dropping an email ID.
I'll take the next question till then. Do
Just
FP&A
yeah, go ahead, Dhawan.
do FP&A team do a competitor and industry analysis while preparing budgets?
Yes. If you remember, we talked about the annual operating plan. So while you are doing the entire annual operating plan, in that one part could be competitor analysis and industry analysis. And when you usually present the budget, when you usually create the budget presentation for the board, initially you have few slides where you talk about the industry and the competition, and then you get into the company revenues and the company specific details of the budget. So you do it as a part of the annual operating process, along with the budget.
Okay, the question, do we get any certificate for attending this session?
So this webinar, no, but the budgeting and forecasting, once you complete it, you will get a certificate.
And yes, the email ID is shared in the chat box as well. So if you have any questions, you can feel free to write to that email ID.
Yeah. Just in case you're facing any payment related issues because of credit card or something, you can just reach out on this email ID and we'll ask somebody from our team to reach out to you and provide you alternative ways to. Is it possible to get a record? So this training is, or this webinar is getting recorded, and you will receive the recordings on the YouTube channel in the next 3 days. And we'll share that on the email as well as on the WhatsApp group. PPT, I'm not sure because we are sharing the recording, right? So if you want to refer the recording, you can refer the recording. But PPT, we don't usually share it because then there's a risk of it getting copied. So we usually avoid sharing PPT. But you can watch the entire recording in on the YouTube link. Okay, thank you so much. And with
So
that, we will wrap up. Right, Dhawal? Any closing thoughts?
yeah, one or two closing thoughts. One is that so at FPI we have consulted numerous CFOs, and one thing that clearly came out in our conversations with the CFOs is that there is not enough right talent available on FP&A. Right, 79% of the CFOs stated that they are unable to find the right FP&A talent out there in the market, which means there is a lot of demand. Anything that you'll start learning on FP&A today will definitely benefit your career in the medium to long run for sure. Right, so make sure that you don't delay this and start learning. Take that first step towards learning FP&A. Be commercially savvy, because with accounting and compliance getting automated, AI and ML being coming into picture, business partnering and your commercial understanding is what will be prominent over the next few years. So make sure that you start learning financial planning and analysis right away. Yeah, that's what I would say at this point in time.
Amazing. Thanks, Dhaval, and thank you so much for everybody who joined today's webinar and are here patiently till the end. So thank you so much, and we will see you in the budgeting and forecasting bootcamp, or maybe one of the other webinars in the next few weeks. All right. Thank you so much. Thanks, guys. Bye bye.